The Vietnamese economy continues to attract global attentions in 2026 as one of the fastest growing economies in Asia. Despite ongoing uncertainty in global markets, changing trade policies among major economies, and fluctuations in international currency markets, Vietnam has demonstrated remarkable resilience. Recent economic data suggests that the country remains on a strong growth trajectory, supported by manufacturing, exports, foreign direct investment, tourism recovery, technology development, and infrastructure expansion. Vietnam's ability to position itself as a key manufacturing hub in global supply chains has continued to strengthen its economic foundation and enhance investor confidence. According to recent economic reports, Vietnam recorded strong GDP growth during the first quarter of 2026, reflecting the country's expanding industrial output and robust domestic consumption. Economic growth in the first quarter reached approximately 7.83% year-over-year, showing that Vietnam remains among the strongest performing economies in the Asia-Pacific region. The services sector, manufacturing industry, and construction activities have all contributed significantly to this growth performance. Foreign direct investment continues to play a critical role in Vietnam's economic success story. International companies seeking alternatives to traditional manufacturing locations have increasingly chosen Vietnam due to its competitive labor costs, strategic geographic position, favorable trade agreements, and improving infrastructure. Investment inflows into manufacturing, electronics, technology, and renewable energy sectors remain particularly strong. Global corporations continue to expand production facilities throughout Vietnam as part of broader supply chain diversification strategies. The country's success in attracting multinational companies has created employment opportunities, boosted exports, and increased technological transfer. Recent investment figures indicate continued confidence among international investors despite global economic uncertainties. Exports remain one of the strongest pillars of Vietnam's economy. The country's export-oriented manufacturing sector continues to benefit from growing demand for electronics, machinery, garments, footwear, and technology-related products. Vietnam has established itself as a major production center for many international brands. Electronics and technology products have become increasingly important contributors to export revenues, helping diversify the country's export portfolio beyond traditional manufacturing sectors. Export growth has been supported by Vietnam's extensive network of free trade agreements and its reputation as a reliable manufacturing destination. The continued relocation of supply chains from other regions into Vietnam has further strengthened export performance. The manufacturing sector remains the backbone of Vietnam's economic expansion. Industrial production has shown healthy growth throughout 2026, supported by strong export demand and ongoing investment in production capacity. Factories producing electronics, semiconductors, consumer goods, machinery, and textiles continue to expand operations. Vietnam's manufacturing competitiveness has improved due to investments in infrastructure, workforce development, and industrial zones. Government initiatives aimed at supporting high-value manufacturing have encouraged companies to move beyond low-cost production and into more sophisticated technological activities. This transformation could help Vietnam sustain long-term economic growth and increase productivity levels across the economy. Path-structured development remains a major priority for Vietnamese policymakers. The government has announced ambitious plans to improve transportation networks, logistics systems, ports, airports, railways, and energy infrastructure. Significant investments are being directed toward major infrastructure projects designed to support future economic growth and improve connectivity across the country. Authorities have emphasized public investment as a key driver of economic activity, while also encouraging private sector participation in large-scale development projects. Infrastructure improvements are expected to increase economic efficiency, attract additional foreign investment, and enhance Vietnam's competitiveness within regional and global markets. Tourism has also contributed positively to Vietnam's economic recovery. International visitor arrivals have continued to increase as travel activity normalizes across Asia and other major markets. Vietnam's natural attractions, cultural heritage, beaches, and urban destinations continue to attract millions of tourists annually. The tourism sector generates substantial revenue for local businesses, supports employment, and stimulates demand in hospitality, transportation, and retail industries. Recent statistics indicate strong growth in international visitor numbers, supporting broader economic activity throughout the country. Domestic consumption remains another important growth driver. Rising incomes, urbanization, and a growing middle class have increased consumer spending across a wide range of sectors. Retail sales continue to expand as consumers spend more on goods, services, technology products, housing, transportation, and entertainment. Strong domestic demand provides an additional source of economic resilience, reducing dependence on external markets. Consumer confidence has generally remained positive as employment opportunities expand and economic conditions improve. Retail activity has shown healthy growth during 2026, reflecting continued strength in household spending patterns. Financial technology and digital transformation are emerging as increasingly important components of Vietnam's economic development strategy. Digital payments, e-commerce, online banking, and financial technology services continue to expand rapidly throughout the country. International fintech companies are showing growing interest in Vietnam due to the country's large population, increasing smartphone usage, and rising demand for digital financial services. The expansion of digital financial infrastructure supports greater financial inclusion and creates opportunities for innovation within the economy. The growth of technology-related industries could become a major contributor to Vietnam's future economic performance. Vietnam's stock market has also attracted significant attention from international investors. A major development occurred when Vietnam secured an upgrade from frontier market status to emerging market status in a key international index framework. This upgrade is expected to attract billions of dollars in additional foreign investment over the coming years. Increased participation by international institutional investors could improve market liquidity, support capital formation, and strengthen Vietnam's integration into global financial markets. Analysts believe that enhanced market access and ongoing regulatory reforms will further improve investor confidence. Despite these positive developments, Vietnam faces several challenges. Global trade tensions, changing tariff policies, geopolitical uncertainty, and fluctuations in international demand remain potential risks. Economic growth could be affected by weaker external demand from major export markets, disruptions in global supply chains, or financial market volatility. Policymakers continue monitoring these risks while implementing measures designed to maintain economic stability and support sustainable growth. International organizations generally maintain positive outlooks for Vietnam, but emphasize the importance of structural reforms and prudent economic management. Attention has also focused on the Vietnamese Dong, commonly referred to by investors as the VND. The currency remains one of the most discussed topics among currency speculators, investors, and individuals interested in potential future revaluation scenarios. It is important to understand that the Vietnamese Dong is managed under a controlled exchange rate framework, with the State Bank of Vietnam maintaining oversight of currency movements. Unlike currencies that float freely in international markets, the VND operates within a managed system designed to support economic stability and export competitiveness. This framework allows authorities to respond to changing economic conditions while limiting excessive volatility. Throughout 2025 and into 2026, the Vietnamese Dong experienced modest fluctuations against the US dollar. Recent market data shows that the exchange rate has generally remained within expected ranges, although the Dong has faced some depreciation pressures due to global dollar strength and international monetary conditions. The currency has remained relatively stable compared with many emerging market currencies, reflecting Vietnam's strong economic fundamentals and ongoing foreign investment inflows. Current market rates indicate that $1 trades at approximately 26,000 Vietnamese Dong, with variations depending on market conditions and official reference rates. Many online discussions continue to speculate about a dramatic revaluation of the Vietnamese Dong. However, there is currently no official announcement from the State Bank of Vietnam or the Vietnamese government indicating plans for a sudden large-scale revaluation. Most economists believe that any future appreciation of the Dong would likely occur gradually, rather than through a sudden adjustment. Policymakers generally prefer exchange rate stability because abrupt currency appreciation could reduce export competitiveness and negatively affect manufacturing industries that depend on international markets. Economic fundamentals remain the most important factor influencing the future direction of the Vietnamese Dong. Strong GDP growth, rising exports, increasing foreign direct investment, expanding foreign exchange reserves, and continued economic modernization could support long-term currency strength. If Vietnam continues attracting investment, upgrading its industrial base, and moving into higher value manufacturing activities, the Dong may gradually strengthen over time. However, such appreciation would likely be measured and carefully managed, rather than sudden or speculative. Several international financial institutions have projected relatively stable exchange rate conditions for the Vietnamese Dong over the near term. Forecasts suggest that exchange rate movements are expected to remain moderate, reflecting balanced economic conditions and central bank management. While some analysts anticipate slight strengthening over time, most do not forecast dramatic currency revaluation events. The focus remains on economic stability, inflation control, export competitiveness, and sustainable growth, rather than rapid currency appreciation. Inflation management also plays a crucial role in currency stability. Vietnamese authorities continue monitoring consumer prices while implementing policies designed to maintain purchasing power and macroeconomic balance. Recent inflation figures remain manageable, although policymakers remain vigilant regarding potential price pressures resulting from global commodity markets and domestic demand growth. Stable inflation contributes to investor confidence and supports broader economic stability. Looking ahead, the medium-term outlook for Vietnam remains highly favorable. The World Bank, OECD, and other international organizations generally project continued economic expansion through 2026 and beyond. Growth forecasts typically range around 6 to 7% annually, placing Vietnam among the strongest performing economies in the region. Strong investment, manufacturing expansion, export growth, infrastructure development, and technological modernization are expected to support future economic performance. Vietnam's leadership has also established ambitious long-term development goals, including higher income levels, technological advancement, infrastructure modernization, and deeper integration into global financial markets. These objectives reflect the country's desire to transition from a manufacturing-based developing economy toward a more diversified and innovation-driven economic model. Continued reforms, improved productivity, and greater private sector participation are expected to play important roles in achieving these goals. For investors and observers following the Vietnamese Dong, the key takeaway is that Vietnam's economic fundamentals remain strong. The country's growth story continues to attract global attention, and economic indicators suggest continued momentum. While rumors of an immediate large-scale currency revaluation frequently circulate online, available economic evidence and official policy direction support a more gradual and controlled approach to exchange rate management. Vietnam's future currency performance will likely be determined by economic growth, investment inflows, trade performance, inflation trends, and central bank policy, rather than speculative predictions. As 2026 progresses, Vietnam remains positioned as one of Asia's most dynamic economies, with the Vietnamese Dong benefiting from the country's expanding role in global manufacturing, trade, technology, and investment networks. The combination of strong economic growth, increasing international investment, improving infrastructure, expanding exports, and prudent macroeconomic management continues to support confidence in Vietnam's long-term economic prospects and the future stability of its national currency.